Alright, next up we have chapter 3, page 4 of your notes. Okay, so we've talked about journalizing and how T accounts help you figure out where to put the cash, what accounts to use, so on and so forth on a journal. But now we're going to talk about something called a source document. Okay, so in your notes you're going to make sure that you are flipped over to page 4. You have the definition of a source document up here at the top. You need to make sure that you record that or write it down in your notes. A source document is a business paper from which information is obtained for a journal entry. So basically it is something that proves that the transaction took place. Okay. Now there's 5 kind of source documents, and you can see the 5 here on the screen here. Okay, this is kind of a visual as to what they look like, each one of them. And all of them are used at different occasions. You use them depending on the transaction, determines which one you are going to use. But let me tell you what the 5 are. Okay, so the first one here, this one here, this is a memorandum. Okay, a memorandum, so write that down. If you have to pause the video, do that. The next one over here, this one here, this one is a receipt. Okay, so you have a receipt as well. The third one over here is a calculator tape. So we have calculator tape. Down here, D is a check. So we have a check also. And the last one is a sales invoice. So those are your 5 source documents. You need to have those written in your notes as well. Okay, so let's talk about one of them. Alright, the first one we're going to talk about is a receipt. Okay, so a receipt, here's your definition: a business form giving written acknowledgement for cash received. Now here's the number one thing that you need to know. When do I use a receipt? Okay, you use a receipt anytime you receive cash from owner as an investment. So anytime you receive cash from owner, use receipt as your source document. And here are 2 examples that we're going to use to kind of show you how this works. So you need to write down your definition. You need to write down when you use a receipt. You need to write both those things in your notes. And then also there's a spot for you to write down the transactions as well. Okay, so write those down, and you're going to put them on a journal, so you need to have them written down so you know what you're journalizing. Okay, so let's look at the first one here. Okay, received cash from owners and investment $35,000 on January 2nd, 2009. Okay, so obviously your date goes here. Okay, you're going to put your date here. That's the easy one. Okay, and you have to figure out where everything goes. So we've actually done this one, I believe, in class as an example. But if not, we're going to do it now. Okay, so we have cash on here. Okay, so that's easy. Here's our cash as a special amount column. Sales and cash are special amount columns. So your $35,000. Anytime your cash goes up, it goes in debit here. So $35,000 here in cash debit. And there was no sale made, so you're not going to use that one. And the other one is going to go in the general area, the general amount column. Okay, and you're going to use the owner's name. So owner's name here, so whoever the whatever the owner's last name is, capital, and then you're going to put it here in the credit spot of the general area. Okay, so let's take a look. I actually have it on here already, so let's take a look. It's exactly how it would look. Okay, so you have your January 2nd. McBroom Capital, we're just going to use me as the owner for the example. Now here's the key thing right here. Anytime you use a source document, you got to put what type it was here. Okay, and for receipt, you always use an R. Okay, you always use an R in here. And it's the first time you've used R in this journal, so you're going to use a 1. So it's R1. Now if this was the second time an owner had invested in the company, it would be R2. Then your $35,000 over here in general credit, like I said, and also in cash debit. But the number one thing here is what I want to make sure you understand here is this R1 for receipt goes right there. Okay, so that R1 goes right there. All right, so if I went too fast there, pause it, back up, make sure you have that all written down. Now you have a second transaction here. I'm not going to show you the answer to this one, but based on the first one here, you should be able to figure it out. Okay, so you take this transaction, journalize it. Whoop, whoop. There's some answers there for you. Okay, journalize it in your notes as well. Now, don't forget, this is the second transaction. So you used R1 on the first one. So remember what I said about if you use the second one, what it would be. Okay. All right. So that's a receipt. Now let's move on and let's talk about a check. Okay, when a check is used. Now, first of all, the definition for check is a business form ordering a bank to pay cash from a bank account. That's the definition, and that needs to be in your notes. Now, when we use a check, anytime cash is used to pay for an item, you use a check. Okay, so if the transactions ever say paid cash, always is a check that's used as your source document. We have our two examples here, so you're going to write those in your notes. So we need the definition, when it's used, and your two examples all written down in your notes also. Okay, all written down in there. Alright, so let's take a look here. August 3rd, 2009, paid cash for supplies. Okay, so the date, the easy part, the date right here, August 3rd. Now, we paid cash, and like I said before, one of the reasons why this is called a special amount column is because it gets used so much. They just put it on there because you use it so much. So just like before, we're going to use cash. Okay, now once again, if cash decreases, it goes on the credit side. If cash increases, it goes on the debit side. Okay, so our cash, we paid cash for supplies. Do we have more or less cash? We have less. So you're going to take this amount and put it on the credit side. Okay, now not a sale made, so we're not going to use that. So the other one has to go in your general amount columns. Okay, so we bought supplies, so your account title will be supplies. We have to figure out what our source document is, what we put in here when it's a check, and then we put our 1,577, and the it was credit over here, so it's debit over here in this box here. Alright, so let's take a look. This is how it should look. Okay, this is how it should look. Okay, date, account title. When you use a check as a source document, you use a C. So this is the first time we've used it. So it's C1. C1. Okay. If we were going to write another, if we did another transaction where we use a check, it's C2. The next time it's C3, so on and so forth. All right, our cash goes here in general debit. Our cash it goes in cash credit, and your journal is complete. Okay. If I missed anything here, or if you missed anything, go back, review it, pause it, do what you need to do. But this is it for the fourth page of the notes. You can move on to the next one. Any questions, let me know.